Hey, what's up traders? Welcome to my office. My name is Matthew, and today we are going to be breaking down another TradingView strategy. This is a MACD crossover strategy or system, and as you can see here, it's decently profitable on US yen on this 30-minute time frame. Today I'm going to be breaking down the source code to this system, explaining my thoughts on the system. It was recommended by someone on the last video that I published on my channel. And that someone was John here, who said you should watch the Trading Rush channel video on the MACD plus 200 EMA system. Probably worth coding and testing. So that's what we're going to be doing today. I do read every comment on my videos. I can't always reply to all of them. I'm a pretty busy dude these days, but I do my best to address the ones that I can, including this one here where I apparently upset someone due to the way that I pronounce data. I'm really sorry about that. Sparkle. Unfortunately, I have an incurable affliction, and that is that I'm Australian, and I guess we pronounce data or data a little bit differently over here, but I'll try and keep that in mind. From now on, I'll try and say data. So before we begin, I'm just going to play a minute or two of this clip where Trading Rush, he or she or they explain their trading rules for this particular system, and then I'll give you my thoughts on this system. So I'll play a few minutes of this clip.
Technical analysis of stock prices and can be applied on a stock trading or Forex trading chart. This is what MACD indicator looks like. By default, MACD indicator will come with two lines, a blue line called MACD and a red line called the signal line. MACD crossover strategy is simple. Once the MACD line crosses above the signal line, it is considered as a buy signal. Furthermore, you should only take buy signals that are way below the zero line of the histogram. But there is a big problem with this trading setup. There is no way to identify a good direction of a trend using MACD indicator alone. To be a profitable trader as a beginner, you should always trade in the same direction as the market is trending. So, to identify the trend, we are going to use 200-period exponential moving average. If the market is above 200 EMA, it is considered as an uptrend. Remember, only buy when the MACD gives a buy signal, and the market is in an uptrend. Here's an example of a buy setup. The market is above 200 EMA, so it's an uptrend. The MACD is showing a crossover below zero line of the histogram. In this buy setup, entry is at the MACD crossover, and the stop loss is below the pullback of the trend. Your profit target should be more than the risk you are taking on the trade. So if you lose one and win one, you will still be in profit. There are different ways to set profit targets. Personally, I will take 25% off the trade when the trade reaches 1 times the risk, and will move the stop loss to break even. Then, I will set a second profit target of 2 times the risk I originally took on the trade. So even if the trade never reaches my second profit target, I have already taken 25% off the trade in profit, and will not lose money. Here are some more.
Alright, I'll leave it there. If you want to watch more of this video, I'll leave a link in the video description. A couple of things I want to mention here. The first thing that just stood out to me is this MACD crossover. There's a bit of subjectivity and discretion involved in this particular crossover. According to my eyeballs, which are pretty good at identifying visual patterns, this crossover here occurred much sooner than where Trading Rush is pointing out where the entry was. So that's hindsight bias coming into play here. It's very dangerous when we're testing systems especially. In this case, it's not a big deal since it's just explaining the rules. But this crossover actually occurred somewhere around here, if we're getting really technical, which we should since we're coders. So that's one thing I want to point out. Bit of subjectivity there that could influence how the system actually performs when backtested using code. The other thing is the stop loss placement. Trading Rush says to place your stop loss below the low of the pullback. I don't know what that means. That's subjective. They didn't say 1 ATR below the swing low. They didn't say X amount of pips or percentage points. None of that. They just said put your stop loss below the swing low. So that could mean anything. As coders, we are going to have to come up with a rules-based system for stop loss placement. For today's video, I'm probably just going to use a simple look back period. There are more advanced ways to detect swing lows and swing highs. in pullbacks, but for today's video, it should work just fine to use, say, I like 7 for some reason. Maybe I just like the number, but 7 to 10 bars look back from our entry. If we look for the lowest low over that period, that can be our stop loss placement, and then we can put our stop loss, let's say, half an ATR below that swing low. That way, I like using ATR stop placements instead of fixed stops, because that way our system adapts based on volatility, based on time frame, and based on market. So if we used a fixed pip stop loss, that complicates things, because how far one market moves could be very different on a different market. So pound yen, for example, moves significantly more pips on average than Aussie dollar, for example. And so that's something that I like to factor into my systems, especially on Forex markets. Obviously, crypto stocks can be a little bit different, particularly stocks, but ATR is a good way to go. So I'm going to use an ATR stop loss below the swing low over the past 7 bars. Let's start with that. Then the take profit, they said, is 1-to-1, and they take a quarter of their position off at 1-to-1. Now, I'm not going to go into too much detail about my thoughts on that, because that's a matter of preference. If you like to take profit, a partial profit, it's completely up to you. There are systems that work with that. Personally, I like to keep things simple. I do have some systems that trade 2 positions, and then one takes half my position off at 1-to-1 and lets the other half trail or ride to try and capture more profit. So that's okay. With this system, I'm okay with that. So we're going to use that in today's system too. And that also gives me a good opportunity to show you guys how to use multiple positions in the TradingView strategy tester. So we can close out a quarter of our position at 1-to-1. And then I'm going to set my second profit target at 2-to-1 and take off the remainder of our position at 2-to-1. So that keeps things simple for today's video. There's one last thing in this video I want to mention in case you go and watch this video. At around 4 minutes and 25 seconds, Trading Rush, whoever this person is, says,
later switch to Euro JPY. This strategy works on any time frame, and also works on both Forex and stock markets. Here, I'm using 30 minutes time frame.
No, this system does not work on all markets and all time frames. There is no system in existence that works on all markets and all time frames, and there never will be. The reason for this is that trading strategies perform, well, I probably shouldn't say definitively that there is none, and there never will be. But the odds of a system performing within certain performance metrics that you're comfortable with over all markets and timeframes is Nick Raj, who is a veteran trader I highly respect and consider a mentor. I learn a lot from him. I respect him greatly. He's got a book called Unholy Grails. I highly recommend you go and obtain a copy of that book if you can. It's fantastic. What this trader here just laid out is the definition of a holy grail, which Nick Raj would suggest doesn't exist. And he's been trading for 30, 40 years or something now. So he would know. I've never met a professional trader who would claim that any system that they trade works on all markets and all time frames. Crypto is very different to stocks. Stocks is very different to Forex. Forex is different to commodities and futures. You get the idea. There are a lot of different markets out there that can be traded, different time frames, different restrictions, different challenges with different time frames. You've got commission costs, slippage, liquidity issues, depending on the time frame and your account size. You've got leverage restrictions. There's so many different things that can influence a system's profitability across different markets and timeframes. That to say or to claim that a system works on all markets and all timeframes is, as far as I'm concerned, lying at best and downright catastrophically dangerous at worst. Because if you believe that and you go out and try and trade a system on different markets and timeframes that you haven't tested to prove whether or not it actually works, you're going to lose money, maybe all of your money, which is obviously not ideal. But anyway, with all that said, let's jump into the Pine editor and start coding this system, and then we can actually run some tests on some markets and timeframes and see how it performs. All right, so as you can see, I've already written out the source code to this script that we'll be using today in today's example. A link to that source code will be in the video description if you want to follow along. But I'll write out the code again with you guys and explain each line of code as we go. Before I begin, I want to make it clear that this is not trading advice. This is not investment advice. I'm not encouraging you to trade this system, whether or not it's profitable. I don't care. This is not a system that should be blindly traded. I'll put a disclaimer up here that you definitely should read and take very seriously. Trading is not a game. It's game-like. The points are money and you want to make as many points as you can. But it's very serious and there are very serious risks in trading. And I don't want you guys to take those risks lightly. Don't take anything I say as fact. Make sure to go out, do your own research. I can be wrong about some of this stuff, especially on YouTube. I do my best to vet the content I put on YouTube. I do as much testing as I can, but my time is limited. I don't stringently test every system I teach on YouTube or show on YouTube because these systems are meant to be examples, not necessarily an end product. I'm not giving you systems to go out and trade. I'm giving you ideas to play around with and demonstrating concepts in Pine Script. So let me be very clear about that. If you do want to trade this system, take the time to backtest it yourself properly over hundreds, preferably thousands of trades. Go through that process to make sure that the system performs within metrics that you are comfortable with. All right, so before we start, it's probably a good idea to put in the source code here some comments explaining the rules of the system. I'm going to be using these rules. Let me check my notes to make sure I don't miss anything. So my version of this MACD strategy is going to be, first of all, we are using the MACD indicator with default values according to TradingView. We are also going to be using the ATR indicator. I believe I just use a 14 period ATR. I think that's it for indicators. The first rule of this strategy is that price must be trading above or below the 200 EMA. I should probably add EMA 200 to our indicators then. The second rule is that this is one that I came up with while I was building out the system. I found that it significantly increased the profitability of the system because it removed a lot of noise from the system. And this filter is that only one bar can close above, can't spell today, above or below the 200 EMA over the past 5 bars. My goodness, I have fat fingers today. I'll explain that rule in more detail when we get into, when we have more code written and we can see some visual examples on the chart. The third rule is we take the first MACD cross and ignore subsequent signals until our take profit or stop loss is hit. Now, the fourth rule for this system is that our stop loss is going to be 0.5 ATRs, or so half an ATR, above or below the recent swing high low over 7 bars. The fifth rule is that our first take profit is at 1-to-1. We're going to take off 25% of our position. The sixth and final rule is that our second take profit is at 2-to-1, where we take off the remainder of our position. That's it. Let's get coding. So I have some code already written out here. Some of this is copy and pasted from the previous video. All I've done here is set overlay to true so that we're drawing over price action. I've set calculate on order fills to true. That means that when a position is filled on the open of a bar, the script executes its code again after that position is filled. What that ensures is that if our first take profit is hit on our entry bar, so we enter long, let's pretend, this probably wouldn't be a signal, but let's pretend we entered long at this open and our stop loss, for argument's sake, was down here so it didn't get hit. And price came up and hit our first take profit on this bar. If we don't set calculate on order fills to true, then the strategy tester will not exit our position on our entry bar. So we need to set that to true for this particular system. Not all systems need this on, but for this system, I want that on. The next thing I'm going to do is use the bar magnifier. This is optional, but I definitely highly encourage that you use it. If you haven't seen my previous videos explaining what this does, make sure to go and check them out. I'll leave links in the video description if I remember. Next up, I set my initial capital to 100,000. I'm actually going to drop that to 10,000 because for Forex trading, that's probably more appropriate. For stock trading, typically 100,000 is a sort of benchmark figure. For stock trading, for Forex trading, I'd stick to 10K when I'm developing a system to see if it's profitable. Default quantity type is going to be percentage of equity. Default quantity value is going to be 100% of our balance invested on each trade. This is for the stock market primarily, and maybe crypto. For Forex, we're going to be using leverage, and I'll use a different position size calculation technique, which we'll get to when we get to that part of the script. And our commission type is going to be commission.cash per contract. Again, you need to set this up to however your broker handles commission costs. If you go to the properties tab of your system, your script interface, come down to commissions. It's a good idea to fill this out as accurately as you possibly can, which is difficult on TradingView because I don't know about you, but I don't trade in Japanese yen. I typically use US dollars or Aussie dollars. I don't know why its commission is set to yen per contract, but probably because we're on US yen. But in any case, you should set commission up to appropriately track your broker's commission table. That will give you a more accurate reading on the system's performance. So those are our default strategy parameters for this system. The next thing we need, or the next thing I like to do on my scripts, is get my user input. So for today's lesson, I'm just going to copy and paste all of this to save time. So there's a lot of user inputs for this system. Half of them are MACD inputs, and these are just the default MACD parameters. I haven't changed them from the default MACD. So if I take the MACD off my chart, on your chart, to add the MACD, just come up to indicators, metrics, and strategies, type in MACD and spell it properly. And you want this one here, moving average, convergence, divergence, and the default settings are what we're going to be using in today's lesson. But because our script cannot speak to this script, we need to replicate the MACD in our system script, our strategy script, so that we can get these values here. So that's why we have these inputs. I also have my system entry settings. So we have our EMA filter length, which is 200 period by default. We have our max bars above or below the EMA. This should be set to 1. 1 bar by default is allowed to close above or below the 200 EMA preceding our entry signal. So our stop loss multiplier is set to 0.5. This is a multiplier of the ATR, so half ATR stop loss by default. Our stop loss look back is 7 bars. Our system risk settings, for our first targets risk reward, it is set to 1, so 1 to 1. So when we put our position on, it's going to be 1 to 1. So 39 pip stop loss would mean a 39 pip take profit distance. For our second target, it's going to be 2 to 1 by default. Our Forex risk percentage is what I mentioned earlier. For Forex markets, we're going to calculate our position size slightly differently. I'll explain that later. And then we have our first target percentage. This is how much of our position to take off at our first target. So by default, it's set to 25, or 25% of our total position size will be closed out when price hits our first target. And the remaining 75% will continue to run until it either hits our take profit. I forgot to mention one of the rules here is that we move our stop loss to break even after the first target is hit. I forgot to mention that. Very important rule. So once our first target is hit, we close out 25% of our position. Once our second target is hit, we close out the last 75% of our position, or if our break-even stop loss is hit, we exit the trade for break-even. Then we have our MACD settings, which I won't go over. You can Google the MACD if you want to know what all of these different parameters do. So that's it for our user inputs. Next thing we need to do is get our MACD values, because that's integral to this system. So we'll get that first. To do that, we can use the TA namespace or library, the technical analysis library. So ta.macd will give us the MACD parameters, and we're using what is referred to as a tuple here. The tuple gets 3 different parameters simultaneously from a single function call. So this MACD function returns a MACD line, a signal line, and a history line or histogram line. So we get all 3 of those values from one function call. We pass in all of our MACD settings into that function call, and that gives us our blue line, our orange line, and these bars here, this histogram. So once we have that information, we can then detect crosses of these lines, and we can check whether those crosses occur above or below the 0 mark of our histogram. That is a terrible line I just drew, but you get the idea. Hopefully I'm doing a good job of explaining what I'm doing here. The next thing I do is get some more indicator values. So we just get the EMA based on the closing price, based on our EMA filter, which is 200 bar look back by default. Then I also get our ATR with a 14 period look back by default. Next up, we need to check for the MACD crosses. So cross up, we'll check if ta.crossover for our signal line and MACD line is true. So our signal line is our blue line. So this right here would be a valid long signal. We're below the 0 point on the MACD, and our signal line crossed over the MACD line, and cross down is the opposite direction. So this here would be a valid short trade because our signal line crossed down over our MACD line while it was above the 0 point on our histogram. Next up, we have a few more general filters. So I like to do this in my trading strategy scripts. I like to check that the EMA and the ATR are not NA. So the only time these indicator values will be NA or not a number is on the very first few bars on our chart. So for example, the EMA is the easiest one to demonstrate. The 200 EMA obviously requires 200 historical bars before it can start plotting onto our chart, before it can calculate its value. So on all of these bars here, before the 200th bar, the 200 EMA value will be NA. And so if we're detecting signals while the EMA is NA, that's going to be a problem because we don't have an EMA to reference. It's going to be especially a big problem if we take a long signal or a short signal and the ATR, which is a 14-based ATR. So we need to wait 14 bars before the ATR will calculate its value. If we were to take a long or short trade on any of these bars before that 14th bar, our stop loss and our take profit are going to be NA as well, because if you do any mathematical calculation on a value that's NA, the resulting value is NA. And if you have a NA stop loss or an NA take profit, your trade will never close. So that is going to be a problem in our strategy tester. So I like to make sure that all of my indicator values are not NA. And this is a good practice to employ on any script you code that uses an indicator value. The next trading conditions we need to check is our trend conditions. So is the closing price above or below the EMA? That gives us our up or down trend filter. That's a simple one. Next, we need to check our long and short trading conditions. So for long conditions, we're checking our trade filters. So that's making sure that our indicators are not NA. And the MACD line is below 0. So let me bring that up a bit. So the MACD line, remember, is our blue line. So it needs to be below 0. And the signal line, now this is on the previous bar. So on every bar that we run our script on, it's checking to make sure that the MACD line on the previous bar was below 0 and the signal line was also below 0. So our red or orange and our blue lines must both be below 0 in order for our long and short conditions to be met, and also our indicator values cannot be NA. Next up, we need to confirm our long and short signals. Now you could combine all of these parameters into one Boolean condition. I'm splitting them up like this just to make the script a bit easier to read, especially since I've blown up my screen size here, my resolution. If I were to combine all of these onto one line, it would go off my screen. So that's why I'm separating them like this. You don't need to do it like this, but it does make the code a lot easier to read. So next up, we need to confirm our long and short setups. To do that, I just combine all of our conditions. So do we have our long conditions met? And do we have an uptrend? And did the MACD cross down or cross up? So once we have all of these conditions combined, then we can check later on to make sure that we're not already involved in an open trade. And if we are not involved in an open trade, then we can take a position because our entry criteria is met. But before we enter any trades, we need to calculate our stop loss and our targets. So to begin with, we need to get our long stop and our short stop. Now remember, I said that for my version, my variation of this MACD script, I'm going to be placing my stop loss half an ATR above or below the recent swing high or low, and the recent swing high or low is defined over a 7-bar look back. So that's what this code here does. It checks for a long trade that we're buying the market. We want the lowest low over our look back period, which is 7 bars by default. And then once we have that price, we subtract the current ATR value multiplied by our stop loss multiplier, which by default is 0.5. So this would subtract half an ATR from the lowest low over the past 7 bars. That gives us our long stop. And for short trades, it's the same thing, but the opposite direction. We're looking for the highest high over our look back period and adding our ATR stop loss value to that. So let me save my code now, make sure we don't have any compiler errors. Everything is fine. So now that we have our long and short stops, we can check if we have an entry signal. If we have an entry signal, we can calculate our take profit based on our stop loss distance, and we can start running this system through the strategy tester. So before we do that, we need to prepare a bunch of persistent variables that are going to save the open trades stop loss, the first take profit, and the second take profit. Now stop distance, we don't really need stop distance to be saved. We only need these 3 variables. So trade stop, trade target 1, and trade target 2. These will all be overwritten with the current trade's stop loss price and take profit prices because there were 2 targets. Right, so now that we have that, there's one more filter we need to get in our script, and that is our EMA filter, the how many bars close above or below the moving average. So here I'm declaring 2 integer values or whole number values, bars above MA and bars below MA. And then we loop over the past 5 bars and we add up how many bars closed below and how many bars closed above the EMA value over those past 5 bars. And then we can use these 2 variables here to eliminate any trades that had more than 1 bar or more than whatever this is set to, 1 by default. If more than this number of bars closed above or below the MA, the trade setup is invalidated. That removes a lot of noise from the system from when price action is trading really closely to the MA, or in other words, consolidating. This system doesn't work well during consolidation, during sideways markets. And so this is one way to sort of mitigate that issue. There are other ways, but this is the simplest way I could think of that isn't going to overcomplicate the script for today's lesson because it's already going to be a particularly long lesson. So now we have everything we need in order to determine whether or not we have a valid long or short trade. And that's what we do next. I'll copy this code over and explain what I'm doing. I'm combining all of my signal filters. So everything we've done so far gets combined into long trade and short trade. We check if we have a long signal and the bars counted below our 200 moving average is less than or equal to however many bars we've set this to, and we are flat, so we don't have any positions open. So our position size will be set to 0. Strategy.position size will be set to 0 whenever we have no contracts open. If we are long, this will be a positive number. If we are short, this will be a negative number. So now we have everything we need in order to start entering our positions. There we go, that appears to work fine. So for Forex markets, now before we continue with this video, I just want to quickly mention that this code here, I discover later in the lesson that this code doesn't actually work the way I want it to, at least not on yen pairs. It works on dollar-based pairs like euro, dollar, and that sort of thing For some reason, it doesn't work on yen pairs. I haven't figured out how to get it to work properly yet. So just ignore this code here and focus on this code here. This is the code we'll be using to enter our positions later on in the lesson. Sorry for any confusion this causes. I'll explain this in more detail towards the end of the lesson. And then the next thing we can do is the same thing for short trades. So I can also copy this if statement down here. So this is exactly the same as our long trades, but in the opposite direction, obviously. But we're doing exactly the same thing here. We're resetting all of our trade variables to NA. Now, the next thing we need to do is calculate our stops and targets once a position is entered. So I'll start with long trades first and explain this code. So once we've entered a long trade, this next bit of code will execute. So once we've entered, strategy.entry has put us into a long trade. So our position size is greater than 0 and our trade stop is NA. So we've reset our trade stop to NA. If these two conditions are met, we're in a long trade without a stop loss. We need to specify our stop loss. To do that, we set our trade stop variable to long stop, and that should be on the current bar, not the previous bar. So we set trade stop to long stop. Now stop loss distance I removed as a persistent variable, so now it's only existing within the scope of this if statement. So we cannot access stop distance outside of this if statement, but that's okay because we don't need to. All we use stop distance for is to calculate our risk reward profile. So what we're doing here is we're saving our stop loss price into trade stop, this VAR variable. Now VAR variables do not reset on each bar, so this will persist across all the bars on our chart until it gets reset to NA. So once we've saved our long stop loss to trade stop, we then calculate our distance, stop loss distance. To do that, we use strategy.position average price. So that gets the average fill price of our open long trade, and we subtract our stop loss price. That gives us, let's say we went long on this bar for whatever reason and our stop loss was there. This code here will give us the distance from our entry price down to our stop loss in pips, or this number here. Once we have that, we can use this distance variable to calculate our reward distance by multiplying that distance by our risk reward profile, which is this first setting here. And then for our second target, we do exactly the same thing, but instead of taking in our first risk reward target, we take into consideration our second target, which is 2-to-1. So we have a 1-to-1 target to start with. Once that gets hit, we move our stop loss to break even, and the remaining position gets taken off at 2-to-1, unless our break even stop gets hit. So that's what this code here does. Next, we need to do the same thing for short trades. So exactly the same thing, but opposite direction. And I need to get rid of that historical operator. So we're checking if our position size is less than 0. If that's true, then we have negative contracts open, which means we are short. So if we are short and our trade stop is NA, which happens up here. So once we enter a short trade, our stop loss is set to NA. If we've entered short and we do not have a stop loss, we need to set one. To do that, we set our trade stop to short stop, which is this variable up here. These two variables are calculated on every single bar on our chart, but only saved to here once we have an actual entry signal. So once we enter short, we save our stop loss, we calculate our stop loss distance, and we calculate our take profits, our two targets, based on our stop loss distance. Same as long trades, except we're subtracting that distance instead of adding it. Let's save our code, make sure that compiles okay. So far, so good. The next thing we do, we're nearly done with this script. There's only 3 more things to do. The next thing to do is to exit our trades when our stop loss or our take profit is hit. The second thing to do is to handle our break-even stop. And the third thing to do is to draw all of this information onto the chart using plot functions. So let's do that next. The next thing is handling our trade exits. So let me explain what these 4 lines of code here do. The first 2 are for our long trades or long trade. We have 2 exits, exit number 1, exit number 2. Exit number 1 exits from entry. So the from entry is the trade ID that we want to exit. In this case of our long exit, we want to exit this entry. Both of these entries, only one of these will get executed depending on which market type we are on. If we're on Forex, this one will get executed. If we're not on Forex, this one will get executed. The only difference being our position size for Forex is calculated slightly differently. They both have an ID of long. So this line of code here will exit our entry ID of long if our limit, so limit is our profit target and it's a price value. You can also specify pips value. I like to work with price. It's a lot easier for me to wrap my head around when I'm coding. So I stick to price typically. So we have a limit order set at trade target 1, which is a 1-to-1 distance from our entry price. If our first take profit is hit, then we exit a quantity percent of I target 1. I stands for input. Target 1 is this parameter here, which is a percentage of our position, our total position size. By default, it's set to 25%, or a quarter of our total position size gets exited if our take profit is hit. If our stop loss is hit, it also exits 25% of our position. And then on the next line of code here, the remainder of our position will also get closed out if our stop loss was hit. However, this second line of code, this second strategy.exit call, long exit number 2, is exiting the same trade ID, same stop loss price, but the difference here is we set our take profit to our second target and our quantity percent is set to 100%. So this first exit, if our take profit is hit, our first target is hit, we'll exit 25% of our position. This second exit, if our take profit is hit, we'll exit 100% of our remaining position. So hopefully that makes sense. It's a little bit confusing, but just rewatch this video a couple of times if it doesn't click, and this will eventually make sense to you, especially if you play around with this code. Basically, we have one position open, but we have 2 exits. And then it's the same for short trades. If our first target is hit, we exit 25% of our position. If our second target is hit, we exit the rest of our position. Or if our stop loss is hit, all of our position is exited for a loss. So that's how we handle multiple targets in Pine Script in the strategy tester. At least that's one way to do it. That's the way I thought of when I was coming up with this example script. The final thing to do is, well, the last 2 things to do, draw all of this information to the chart and handle our break-even stop loss. So let me paste in this code and explain what we're doing here. And I need a sip of water. I'm getting a sore throat from talking so much. This is a long lesson. So the comment here says, handle both long and short trade break-even stops. So we handle both long trade break-even stops and short trade break-even stops with this block of code. And we do this after our first position has exited above. And that's this first exit number 1 for long and shorts. If our position size is greater than 0, so we're involved in a long trade, and the current bar's high is greater than or equal to our trade target. So now before I continue, I've just sort of realized as I'm thinking about this, there's a problem with this line of code actually, in that it won't take into account slippage. If you turn slippage on in the settings properties here, this part of the code won't factor in slippage. So I'm thinking of a different way to do this. What I think would be better here, I'm sorry this is going to be a little bit confusing, but this is an afterthought after I've already written this code out. What I'm going to do instead here is I'm going to create a new variable here called VAR. Now I'm not sure, is position size a float or an integer? I can't remember. It's a float. So we're going to create a float value called trade size, and it'll be set to NA by default. And when we enter our position, I'm going to save trade size as strategy.position size. So let me save that for short trades as well. Now it doesn't matter what this value is. All that matters is that when we exit our first position, our position size is obviously going to change. It's going to be reduced. So instead of checking if price hits our first take profit, what I can do here is get rid of all of this code, and I can just say, if our current position size is not equal to our trade size, our saved trade size, which is the position that was originally opened, if this condition is met, so our current position size is not equal to what it was when we opened our trade, that means we have partially closed our position and we need to move our stop loss to break even. This is a much better way to achieve what I'm trying to do here, because that will, in theory, take into account slippage if this is turned on. So what we're doing here is we're overriding our trade stop value to our entry price, and we are setting our first target to NA. So now I can copy over my plot code, and this will draw all of the information to the chart. So we're drawing our EMA value, and I'm colorizing this based on whether price is above or below the EMA. If price is above it, the EMA will be green. If it's below, it'll be red. I am drawing triangle up and triangle down to identify long trade and short trade signals. And then I'm also drawing my stops and my targets. So if I have an open position, so my position size is not equal to 0, so it's positive or negative, then we are involved in a trade and I draw my trade stop. I also draw my first target and my second target. Otherwise, if my position size is equal to 0, we are not in a trade and we draw NA or nothing. So now watch the magic when I click save. We will now have, hopefully not a compiler error. And there we go. Although we do have an issue here, and our script is no longer taking any trades. And just after pausing for a moment and having a quick look at what was happening, what I need to do is move this new trade size variable. What I've done here is I've set it after we call strategy.entry, but our position size doesn't actually change until the next bar. So this function doesn't execute until the next bar is open. So what I need to do is cut our trade size from our entry code and put it into here, which checks on the next bar. If we're involved in an open trade and we don't have a stop loss set, then we set our stop. So if I paste that on the end here, that should fix our script. So let me save that code and make sure we're getting, there we go. Signals are being generated again. And we are pretty much done. We're drawing our data, our signals, our stops and targets, our EMA, our signal arrows. So this green and red arrow will appear on the setup bar, the bar before our entry, and then we will enter on the next bar's open. Our stop loss is set once we enter our trade. When our first target is hit, our stop loss gets moved to break even on the remainder of our position. So if I scroll up here, our position size is tiny. So something's gone wrong with my Forex code. All right, so now I'm going to add a Forex position sizing code to the script so that we can actually test this strategy on Forex markets while risking a percentage of our account balance. Now, the strategy tester doesn't allow this by default. We only have 3 options here: fixed contracts, fixed dollar amount, and a percentage of your equity. Now, percentage of equity doesn't do what you think it would do. It doesn't, if I set this to 1, what this would do is if I have a $10,000 account, it will buy $100 worth of US yen. That's not the same as what we want. What we want is to risk 1% of our account on dollar yen, which means buying a significantly larger position size than $100. We need to use leverage in Forex. The reason for that is because Forex markets move in such small increments. So 0.5% move in Forex might be the average move on a volatile day. If you're trading 1% of your equity on a 0.5% move, you're not making much money. So I had to come up with a custom solution for Forex markets in order to achieve this. The strategy tester does not support this type of position sizing by default, unfortunately. I really wish TradingView would add this in. It would make Forex traders' lives a lot easier, but for whatever reason, they haven't done that yet. So I've come up with my own solution. It's not perfect, but it is the next best thing, and it's a hell of a lot better than the options we have here. So I'll show you how I did that before I wrap up today's video. But before I do that, just to prove that this code actually works, or is at least highly accurate, I'm logged into one of my accounts here, my discretionary account. I have 9,500 real Australian dollars in this account. And I've set up my script so that if you look up here, my account balance is 9,504. And I've set my base currency in the strategy tester to Aussie dollars. So I've got my account balance in the strategy tester as close as possible to my real account balance. I've put on a position tool here on this latest signal, the signal of this MACD system was generated an hour ago. And here's my stop loss, my entry, and my initial take profit. If I right click this and click create limit order, and I set my risk to 1%, my position size is 0.13 or 13 mini lots or 13,000 units. If we look at the position size that my script has put me into this trade, with an account balance of 9,504, the script is saying that we should be buying 12,939 units, which is very, very, very close to 13 mini lots. And in fact, due to the fact that Global Prime only allow a minimum of 1 mini lot, this is just rounding up to the nearest lot size, or in this case, rounding down to 0.99. If you are trading through Oanda or a different broker that allows trading in units, you could have this exact position size in your lot size, your position size portion of the risk management calculator on TradingView. So anyway, all of that is just to say that this code is as accurate as I can get it. Again, full disclaimer, this code is provided as is. It's just for example purposes. There could be things I'm missing. It could potentially not be accurate. It's up to you guys to do your own testing to see if you're comfortable using this code in your own backtesting process. But with all that said, let's wrap up this video by quickly adding in this code that I'm talking about. So the first thing I've done here is I've set my base currency to US dollars in the strategy annotation function. That way, whenever we add a script to our chart, most of you, I imagine, would be trading in US dollars. If you are not, and you want to be trading in one of these currency pairs, or one of these base currencies, sorry, put that into your currency. So for me, I mostly trade US dollars, but my discretionary account is in Aussie dollars. So I would put AUD here if I was testing strategies with Australian dollars as my base currency. But for now, I'll leave this as US dollars, and I will scroll down a bit here and explain what this is. This is my custom library. It's public, it's open source. So if you want to check out what's in this library, you can go. I'll leave a link below if I remember. Otherwise, just Google Zen library or search it on the TradingView platform and you'll find it. It simply contains a bunch of my own sort of utility functions I use very frequently in all of my scripts. Any function that I use a lot goes into this library, and it just makes it easier for me to share code between indicators without having to copy and paste tons and tons of code. For this particular script, we don't use many functions out of this library, but we do use a few that saves a ton of lines of code in our script and just keeps it a bit tidier, keeps everything neat, which I'm a huge fan of. If you haven't noticed by now, I'm a little bit OCD with my code. I like it to look good, makes it easier to work with, less likely to make errors. So I import my Zen library here, and then I add one user input, risk per trade. And just to be consistent, that OCD kicking in again, I'll add I underscore so that I'm aware that this is an input parameter. And then I need to replace this. The easiest way to fix this in my script is just to save it and go through all the errors. And there we go, that's fixed. So I get a risk per trade amount. This is for Forex. So I'll add in here Forex risk per trade. Any other market that's not Forex, this will be ignored and will not be used. So this is only applicable to Forex markets. And then next up, I copy and paste a bunch of code that I use in all of my automated scripts that allows me to calculate my position size, particularly for auto view. If you're not familiar with auto view, I've done videos on that in the past. This code is primarily used for calculating my position size when auto trading through auto view, which I don't do very often anymore. I use Pine Connector mostly, but anyway, that's outside the scope of today's video. What this code does is it calculates my position size based on the currency conversion rate. So if I were to change my strategy base currency to US dollars here, if you keep an eye up here, it's now tracking the US yen conversion rate. And that conversion rate is being taken into account when calculating my position size so that we get a more accurate reading on the position size. I explain all of this in much more detail in my mastery course. So to keep today's lesson short, I could do a whole lesson on this. And in fact, I have in the mastery course. So I'm going to leave this here. I'm not going to explain too much more about this code. If you want to learn the inner workings of this, you can check out my course. If you don't want to learn it, that's fine. You can just copy and paste this code and it should work just fine if you follow the template that I'm laying out here. Again, disclaimer, I make no promises that this code is flawless. It is just code that has worked for me in the past. And I encourage you, and in fact, beg you to go and test this yourself before putting any real money at risk. So this block of code here will determine our currency conversion rate, which is used to calculate our position size. So now if I scroll down, the final thing I've done here is add this block of code to our long and short entries. So for our long entries, we're checking if the symbol type is Forex, then we calculate our position size. Using my custom library, this function here has a bunch more code in it, complex code that I won't go over in today's lesson. But in the library, I have this AV_get position size function. This will get my position size based on my current strategy equity, my risk per trade input, and my stop loss distance, and the currency conversion rate, if applicable. One other thing I need to mention here is that we are actually calculating our position size based on the closing price of our signal candle. So that's important. The way I've written this script, we actually calculate our stop loss based on the entry bar. So what happens is the script detects a setup bar, tells the strategy tester to enter long, in this case, on the next bar's open. And on that next bar's open, we calculate our stop loss, or we save our stop loss price. For our risk calculation code, our position size code, it actually works slightly differently. So it actually works off the closing price of our setup candle and whatever the stop loss price was for this setup candle. So this stop loss price may be a little bit different to the entry candle, not by much, but it might be a little bit different, just the way that the script is set up. The reason it's set up this way is because we actually enter on the next bar's open. And so to calculate our stop loss based on the previous bar's closing price might not be accurate because price might open down here and the distance from our closing price to our stop loss is going to be very different. Now, if you're okay with having a slight difference in your entry price based on the next bar's open, in Forex, that's not normally a big deal because there are very, very rarely gaps on intra-bar price action. Very rarely. On stock markets, however, there are frequent gaps. And so this becomes a bit of a problem with stock market strategies. If you're only using the script on Forex markets, I'd probably encourage you to take out this code here and move it into your entry code. So before your position size is calculated, you would take all of this out and paste it in here, for example, and then you could paste stop distance into here instead of using long stop subtracted from the closing price. And this would give you a more accurate, consistent reading for Forex markets. But because I wrote the script to be usable on Forex, crypto, stocks, it's a little bit more complicated calculating our stop loss distance because of the fact that our entry price is going to be different to our setup candle's closing price. And we won't know our entry price until the bar that we entered on. And so that complicates things in the strategy tester. What we could do here to keep it more consistent is I could copy this. It's going to make the script a little bit more complicated to read, but it should make it more consistent in terms of execution. I can paste all of that in there, copy this if statement, actually just this here. And I can say, and symbol info is not equal to Forex. And then this stop loss code will only be executed if we are not on a Forex market. And this code will only be executed if we are on a Forex market. Now, if I save this script, let's see if this works. I think it should, in theory. Not quite, because our average position average price is not known until the next bar after we have entered. So what I need to do here is change this to say close. So if I change all of these to say close, and I set this to NA, and this to close, NA. Now the problem we're going to have is our trade size is not known until the next bar after our setup candle. So remember, all of this code here is executed on the setup candle, and on the next bar, our position is actually opened. So trade size is not known until that next bar. So what I need to do now is add one more handle Forex trade size tracking variable. We need to say if siminfo.type equals Forex and strategy.position size not equals 0 and trade size is NA. Then we want to assign trade size to our strategy.position size. This way our break-even code will still work, because remember, our break-even code only executes when our open position size is not equal to the trade size that was opened initially, meaning we closed out a portion of our position. Now if I save this code, hopefully this should work okay. We should be entering positions again. I've made a mistake here. I need to indent all of these, this code here. Otherwise, as soon as this code gets executed, because this was not in the scope of this else statement, it immediately overrides our stop loss to NA, and then our trade never actually gets closed. So now this should work perfectly. Fingers crossed. There we go. That looks right. Here we go. Okay. So we're fixed now. Let's jump over to a stock market really quick to make sure that it's still taking trades there. There we go. So everything's okay. Here's some examples of the issue with gaps. So here, for example, if we had this setup candle occur on this bar, we actually wouldn't have entered our trade until the next bar is open. And that's a very different stop loss distance than this closing price. So that's something to keep in consideration when working with stock markets in particular. In a future lesson, I'll cover some ways to mitigate this issue, but this lesson's already long enough, so I'm going to wrap this up here. Let's jump back over to a couple of Forex markets and just see how this system performed. I flagged a couple of markets. It seems to do well on Forex markets. So here we have a 22% return with a 12% drawdown. Not too bad. US yen is even better. 38% return with an 11% drawdown, approximately, over 356 trades. Pretty good. That's not bad. We are on a 30-minute time frame, so we're not testing over years and years of data, just a couple of years of data. So not super robust, but still profitable, I would say, going forward. This strategy probably won't continue to perform this well into the future, but it's very unlikely to just suddenly stop working. And so there's a good chance this would continue to be profitable at least a year or two into the future, especially as market conditions remain as they are, with volatility being the way it is. Anyway, that's it for the Forex part of this lesson or the video. I will leave the source code below, as I mentioned earlier, and I'll wrap up this lesson with a few afterthoughts. So here I have a watch list of the S&P 500. If I jump over to the first stock here and I change this to 100% of my equity. So now we're buying $10,000 worth of Carnival Corporation. And based on where our stop loss is or our take profit is, determines how much money we win or lose. So on a percentage basis, on this particular trade here, we would have made, assuming our account balance was $10,000, which it wouldn't be here because we've already taken several trades. But if our account balance was at $10,000 on this trade, we would have made 2.5% on our 25% initial target. And then we will stop down for break even on our second position. Everything is all good. Open up the strategy tester, and now these metrics are a lot more accurate. They'd be even more accurate if I added in commissions and slippage. So let's do that now. For interactive brokers, I get a commission rate of about 0.005 cents per contract. So I'll leave that as that. Slippage, you can play around with this yourself if you want to. It's probably worth doing. Let's set it to 10. So that's way too much. Let's set it to 1 tick. Let's see what that looks like. That's a little bit better. That's probably more realistic. So now we're getting about a 1 point slippage, or 0.1% on this particular market slippage on our exit and entries. So when we enter a trade, we get a 1 point worse price than we should be getting. Sorry, we entered here. So we get a 1% worse price, or 1 point worse price on our entry due to slippage. That it's not perfect. You won't get slippage on every single trade. It won't always be a fixed slippage amount, and sometimes slippage works in your favor. And when your take profit is filled, you might make more money than you were hoping to. Usually it doesn't work that way. Usually you lose more money than you were hoping to. But that is important to include in our backtesting. It gives us a more accurate representation of the strategy's performance, at least on historical data. Now, as I mentioned at the start of this video, this lesson is not intended to be a trading lesson. I'm not encouraging you to go out and trade this system. This is purely for demonstration purposes only, just to show you how to achieve certain things in Pine Script. In today's lesson, that is how to combine several indicator conditions. We didn't have any candlestick patterns in this lesson. It was quite a simple system, but I've covered plenty of candlestick patterns in my previous lessons if you want to go and check them out and maybe even add them, candlestick pattern confirmation to this script to see how that affects the performance. We've also demonstrated, importantly, I've never done this before on my YouTube channel or in my courses for that matter, I've demonstrated how to take multiple targets in the strategy tester. So we've taken a partial position off at 1-to-1 and now full position off at 2-to-1. I did include these as user inputs. So if I come up here, you can change how much of your position is closed at our first take profit. So for example, we could take off half our position. I can get rid of these two inputs too. I was playing around with them for my Forex trading experiment. But yeah, now we can take off however much we want to. We can take off half our position and see how that affects our metrics. In this case, it didn't improve them at all. Let's try taking off 75%. That didn't change much either. I'll leave it as 25% for now. And let's jump through a few markets here because I did flag a few that this strategy was surprisingly quite profitable on, which I didn't expect. If I scroll through here, you'll see that many of these markets are not profitable, which is why I say not to go out and trade this stuff blindly. Go and do your own testing. In this case, I made a 40% return with a 30% drawdown, pretty rough drawdown. But remember, this I'm not trading advice, but if you were to trade a system like this, it should be part of a portfolio of markets, potentially time frames, and you would usually have multiple systems in play. And so something like a 30% drawdown on one market might equate to a couple of percent on a portfolio basis. So keep that in mind. This is if we were to trade this market solely with 100% of our capital, these are the returns we would get, theoretically. This includes my fixed commission. It doesn't anymore for some reason. It deleted my commission rate. That's fantastic. Let me add that back in. And let's cycle through some markets, see what we get. ROST was quite profitable. Here we go, 61% return over 382 trades with a approximately 43% win rate. So 43% of trades closed for a profit, and a 13% max drawdown. Pretty solid. Would not expect that to continue into the future since it's a single market, and single markets tend to change their behavior over time quite significantly. Depending on the market capitalization, a penny stock is going to behave very differently when that same penny stock becomes a blue chip stock over a period of 10 years or so, or if that were to happen. So keep that in mind. This is not a robust testing process I'm going through, just demonstrating some of the results here. So there were a few markets here that were profitable. Adding in commission costs did significantly change the profitability of some of these markets. If I get rid of the commission cost and slippage, the returns are quite significantly different. This one's now returning 100% with an 18% max drawdown. If I add in commission costs and a little bit of slippage, that is completely nerfed to 34% max drawdown and 36% return. So that shows the importance of adding in commission costs and slippage, especially on lower cap stocks. Stocks with a smaller price are going to attract much higher commission costs and also slippage due to the reduced liquidity typically in these lower capitalized stocks. So keep that in mind. But yeah, very interesting system here. Align Technology performed quite well with this system over the past couple of years. 24% max drawdowns, not bad. Not bad if this was part of a portfolio of markets and systems. It could have been a nice money maker there. Anyway, this video is long enough. I hope you found it interesting, first and foremost. The script itself is pretty interesting. It's a good sort of template, especially if you are the type of trader to take multiple targets. This is a good base template to cut out what you don't like and paste in what you do want. And specifically this section here and the 2 targets should be enough for you to go out and test multiple target systems if that is something you are into. For now, I'm going to wrap this video up here. I need to go and get myself some dinner. I started this video much earlier in the day, but 3 coffees later and several hours later, it's done. I hope you enjoy it, and I will speak with you in the next lesson. As always, best of luck with your trading, and take care. Goodbye.